Hello traders. Today is the 12th of July, year 2011, and happy trading to you all. London is now open. Okay, now we are looking at the daily chart of the Australian dollar US dollar currency pair. Okay, and as I said before, the Australian dollar is in the overbought zone according to what we have seen on the monthly chart. We are in overbought zone, so we will give priority to sell signal. Okay, we can day trade, taking some bullish trade, bearish trade, but we do not swing trade to the upside, which means we do not take a bullish swing trade in overbought zone. If you want to take a bullish swing trade, you need to come out of the overbought zone, break above it, retest it, and turn around before you can consider, okay, taking a bullish swing trade. Another thing that you need to pay attention to, when a financial instrument is in overbought zone and you want to buy, you need to check the fundamental. So even if the price break above the overbought zone and retest it and turn around, and I want to buy here, I will check the fundamental. Very, very important. Okay, because this Australian dollar US dollar currency pair is directly opposite to the US dollar yen. What is happening right now for the US, this is the USD yen, the dollar yen. People are busy selling the dollar. What is very interesting is that whenever there is one slight bad news regarding the dollar, traders are very excited to sell the dollar. But whenever there is bad news regarding the euro, people are very carefully, except recently people start selling the euro. The Americans are selling their own dollar, and the Europeans are protecting their euro, which is very interesting. Okay, this is what I've noticed. Okay, when New York is opens, okay, traders will sell the dollar. Okay, when Frankfurt is open, traders will buy the euro. So there is a support. The Europeans are supporting their euro. The Americans are crashing their own dollar. Very patriotic. Okay. Okay. So now this video is not about the Americans and the Europeans. This is about the Australian dollar US dollar currency pair. But if you allow me, I can say a bit of my blah 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 blah. Okay. So this is the daily, the monthly chart. We are in overbought zone. Okay. You go back again to the daily chart. As I said before, when we are on the daily chart, we are talking about channel, and I've drawn them already here, so I don't have to ask you any question anymore. So the price bumping between two levels, but because we are in the overbought zone, myself, I give priority to selling in the overbought zone. If you are in the oversold zone, I will give priority to, okay, buying. Okay, the USD yen is oversold. Okay, so if I receive a clear-cut signal to buying, okay, I will take it because I know that we are in oversold zone. But regarding the USD yen, as I told you before, every trade that you are about to take, you must pay attention to the news and the fundamental. And today again, there is a very important news regarding the dollar, the US trade balance. Okay, last Friday, there was a poor job creation, as the non-farm payroll data reveals. That's what I'm telling you. The dollar was going up nicely last Friday. Okay, everybody was happy. Traders were enjoying themselves. But like I told you, you have to take profit constantly. Okay, take profit constantly. And here the news came out, was disappointing. Down. Okay, and since then, everybody, okay, from a little child to old people, everybody is selling the dollar. Okay, no compassion for the dollar here, nobody's. Okay, so that's what I'm talking about. So even though we want to buy the dollar in oversold zone, you must pay attention to the fundamental. Okay, I am not taking any more bearish signals. I told you yesterday was a bearish signal here, a clear-cut bearish signal here, but we didn't take it because we don't want to sell the dollar now. Other traders will take it. Okay, and they have a valid reason here to sell the dollar, fundamentally speaking. And technically speaking, this was a sell signal yesterday, and the Fibonacci target here has been reached, and they continue to go down. By the way, this is the 161% Fibonacci projection zone, okay, but it's exceeded now, so they are seeking the 238% and the 261% Fibonacci projection zone because no support, and there is another data coming up to them. So because the dollar did not perform last Friday, people did not believe again that it would perform this time, so everybody is just bearish. They are just selling it now until the news is released today, okay. So this is regarding the dollar yen currency pair. Going back to the Australian dollar US dollar currency pair, attention, very important, because do not just go and place a trade anyhow, okay. As always, okay, we must adhere to the 5% money management rules and apply stop loss in all trade, okay. Very, very important. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for TSCW SYS08 traders. Our website is www.stochastic-macd.com. Okay, the TSCW SY08 is not a trading robot; it's a trading system. Okay. Now, what's happening here? The price went down in the overbought zone. Very important. The price went down in the overbought zone and then retraced up to the 61.8% Fibonacci retracement level. It did the same thing here. It went to that level before, 61.8 of the down move to this level here, this zone, okay, if you want to call it zone. And the traders start selling, okay. What usually happens, the Fibonacci traders are a bit stubborn traders. I was myself like that before, and they will say that the price must go to the target. It will get to the target. It does not have to, okay. It does not have to. So people start selling here first, but it didn't go to the target, and the price did find a support here, and we went into, okay, a consolidation mode, horizontal channel. Now again the price reached the 61.8% Fibonacci retracement level of the movement from here down to this level here. Traders start selling. As soon as we see that, we draw our Fibonacci level. It does not mean that the price will definitely reach our Fibonacci targets, but we need to know where are the targets. So when the price is coming down, we know where we can take profit. But using the price itself as exit strategy, when you are selling, talking about exit strategy, you will pay attention to the nearest support level, because the price going down, the price looking for a better support level. If one support level is taken out, the next support level will be the next target, and so on and so on, until the bearish pressure diminishes. Okay, very important. So the price retraces up to 61.8%. Trader will say, some trader will say it will go to 127% Fibonacci projection zone. That's where we go. Okay, now another trader will say no, it's not 127, but it will go to, because it retraces up to 61.8, it will go to 138% Fibonacci, okay, projection zone. Okay, and another trader will disagree and say no, it's not 138%, it will go to 150. Another one will say it will go to 161% Fibonacci projection zone, and another person will say it will go to 238%, and another one will say it will go to 261% Fibonacci projection zone. What we said to traders is that draw all the Fibonacci targets. That's it. You don't know where the price will stop. If you're going to stop, you will know. Just draw them, okay? So I have here this level here where I place my first cursor at 10220, okay? And that's the 127% Fibonacci target, or Fibonacci projection, or Fibonacci extension, as some people like to call it. The next levels, okay, is 10151, 10151. That's the 138% Fibonacci projection zone. The third target, which is another Fibonacci extension or Fibonacci projection, is at 10007. 10007. That's the 161% Fibonacci projection or Fibonacci extension. If you want to master the subject of Fibonacci, or the subject of Fibonacci projection or retracement, you need to go to www.dayprotraders.com before it's too late. If you want to continue trading, at one point you will be compelled to learn the subject of Fibonacci. Okay, professional traders use Fibonacci. Fibonacci is stable data in the market, and you will learn to master it. Okay, some of the TSTWSY08 traders, credit to them, they have spent a lot of time at www.dayprotraders to learn to master the subject of Fibonacci. We've seen it. Okay, some of the TSTWSY08 traders. Okay, so credit for that. And also some of the TSTWSY08 traders did spend a lot of time, even days. Okay, congratulations for that. Days learning to master the subject of Elliott wave at www.24elliottwaves.com. Okay, these are stable data in the market, and you will learn them. The next thing that we start talking about recently is the Fibonacci pattern, which has butterfly pattern, Gartley pattern, okay, crab pattern. Okay, if you want to master it, we post also videos, okay, already on our channel www.youtube.com/George Trio. The keyword is George Trio, myself. Okay, so right here, so we have all our target drawn. Okay, 127, okay, 138, 161%. To satisfy other trader, we'll have the greediest target at 238%. 238%. The price at 9526. I don't have space on this daily chart to show you that, so I have to move one higher time frame to show you that, so you can see it. The 9526, I've already have it here. Is somewhere here where I place my cursor. This horizontal line here. This is the 9526 zone. Okay, that's the 238% Fibonacci projection zone. Okay, that's the 238%. Okay, the next target is 261% Fibonacci projection level is right here at 9382. Okay, 9382 in this zone here. Where are we? Oops. What's going on here? Let me see. Yeah, this one. Okay, this one here. Okay, so this is right below here. This is a 261% Fibonacci. Okay, projection zone. This is this horizontal line here. The top one here is a 238% Fibonacci projection zone, and the second one below it, right below it, that's 261% Fibonacci retracement level. You see how it comes exactly on top of this consolidation zone here. You see the price did consolidate it from here to this level here, and exactly our 261% bring it on top of this level here. Okay, that's why we say to you that the price is the number one indicator. Paying attention to the price and the key levels, even if you do not know about the Fibonacci or Fibonacci projection, you see exactly on the dot on the top of the consolidation zone, which is the key levels. Okay, and the 238% come on the low of this candle. You see the tail of this candle here. Okay, on the dot, and also tail of this candle here on the weekly chart. You see that's the 238%. Using the price sum, you can perfectly locate the Fibonacci level without even knowing. Even if you don't know the Fibonacci level, you are trading the price. Okay, you will perfectly locate the key level, because when the price going down, the price looking for a better support levels. So if you draw your key levels already, you will know when you are likely to take profit. You see here, there's one level here at a 105. Which one is the nearest? Okay, so if you draw the key level on your chart, you are likely to see the Fibonacci levels, even if you do not know about the Fibonacci. So if you are a new trader, you are wondering what is all this about. Okay, you don't have to worry. Draw your key levels on a higher time frame, and never ever make a trading decision on one single time frame. Okay, and once you draw your key level, you are likely to locate, okay, the Fibonacci level, because they will coincide with the price levels. Okay, so we have all our line drawn now for our target, because we use these Fibonacci tools. Now once we know our targets, okay, we just follow the price. Okay, so when a price approaching an important support level or important price level, or a Fibonacci level or Fibonacci projection zone or Fibonacci extension level, which I have here, we will watch the price, because there are traders waiting here. Some traders are waiting here, some are waiting here, and even some are waiting on the other side. Okay, in the zone of 238%. Some traders are waiting here, some traders are waiting here. And sometimes you will see some trader already place a trade. They will load it ready here because they don't want to forget. So they will place already a trade here. Some of them. We don't trade that way. We wait for the price to show a direction before we place the trade. We don't assume that the price will find a support here or find a support here or find a support here. Therefore, we don't place a trade in advance waiting for it. We wait for a signal at a spot trading zone. These levels here, these are hot spot trading zone. All these levels that we have here, these are hot spot trading zone. But it doesn't guarantee, it doesn't warrant us to just place a trade assuming or hoping that the price will come there and turn around. But when the price is approaching a hot spot trading zone, we will be ready and just watch it. This is another hot spot trading zone. This morning, those who are trading the Euro USD currency pair, I'll show you. You see, this was a hot spot trading zone. The price touched it here, went up, 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 touched it here, went up. Here it didn't. You see? So if you just place a trade here, okay, this is a bullish trap, by the way, bullish trap. If you just place a trade here to buy, lose what's happened. Stochastic is oversold. Can you believe that? Stochastic 833 is oversold. Can you believe that? But the price went down. This is what we are talking about. But as a TSTW24 trader, TSTWSY08 trader, TSTWSY008 trader, you will not receive any. Today there was no buy signal here. Can you believe that? But I know ordinary trader did place order here to buy because he went up here, he went up here, he went up here, he went up here, he went up here. Therefore, he must go up from here. He must not. He must not. He must not. It does not have to. It does not have to. Okay, you see now? Okay, even if you use the rule or the first best time frame of the TSTW24, you will avoid this nasty bullish trap. Okay, going back again to the Australian dollar US dollar currency pair, so we are approaching a key level again here. Okay, so we will watch it. We do not just place order here to buy. But you will take profit here because you are at a approaching support level. You will take profit. Okay, myself, I did take some profit here. Okay, and again I rejoin the party again. Next profit I'll take it again here. Going down I'll sell again. Okay, because we are in overbought zone, I want to sell. I want to keep selling. That's what I want to do. Okay, but this video is about a Fibonacci projection and Fibonacci extension. How you can use it. Do not use it as a magic level. Do not use it as a level that will force the price, but just acknowledge those levels, that they are a hotspot trading zone, and have your attention, okay, at the highest level when the price is approaching these key levels. It gives you a bit of idea how far the price will go. But just using the channel projection again, you see this channel here, from here to this level here. As soon as it drop out of it, we don't just sell. Okay, we switch to another time frame using the TSTWSY08. Okay, for another entry point again. Just creaming it. Projection of the channel will bring us exactly on the dot. You see how the projection of the channel, this channel, is bringing us exactly on the dot of the Fibonacci, okay, projection of 1 to 7, projecting this channel here. Okay, this channel from here to here. If the price drop below it, if you project it, it brings us on a dot at 1 to 7% Fibonacci projection zone. If you come out of that channel, we project that channel, the previous channel again, it will bring us somewhere in this region here, which is another key level here. Okay, now let me remove my Fibonacci drawing tool, which will bring us here, the price itself, key levels on the price itself. You see, projection of the channel, do not forget that. Okay, so this is just a quick video regarding the Fibonacci projection and Fibonacci extension. Do not assume that because the price retraced up to 61.8 after a downtrend, the price retraced up to 61.8, it will definitely go to 1 to 7 or 138% or 161% or 150% or 176% or 238% or 261%, a Fibonacci target zone. It's just an estimation, okay? Something that gives us, okay, a target, okay, a goal, okay? It's very important to have a goal, and the Fibonacci projection extension is giving us a goal. Now, if we continue to go down, there is a high probability or a high chance that we may reach this one. If it fails after a downtrend, it fails to validate this level as a valid support level, the next target will be here. So if here I receive a clear-cut, neat, okay, bullish signal, I will take it. I will take it because this is where traders are likely to take profit. Now I receive a clear-cut bullish signal confirmed by the price sell. I will take it. Again here, if I receive a clear-cut bullish signal, I will take it. Ultimately, the price is considered, okay, oversold after a downtrend, oversold after a downtrend when it reached the 261% Fibonacci, okay, a projection or extension zone, this zone. So when the price comes to this level, according to the theory of Fibonacci, we are at 261% at that time here on the weekly chart. That will be considered as oversold zone because after a downtrend, projection to 261% is considered as oversold. But does it guarantee that the price will definitely turn around because we're in oversold zone? Ask the USD yen. It was oversold for some time, but people are still selling. I'm speaking to you now. You see? So the fundamental, that's what I'm saying to traders. We are not trading only the fundamental. We are trading, okay, the technical combined with the fundamental. That's how you want to do it. So we'll check the economy news regarding the US economy, the Australian dollar. If today, okay, lunchtime again, the trade balance is kaput, is negative, is bearish, you will see life will come back into the US, the Australian dollar, US dollar, and you'll be wondering what George was talking about today, about all this bearish thing about the Australian dollar. You may see, okay, this thing that is going down today, the Australian dollar, US dollar, start going up because if the fundamental regarding the dollar is weak, the Australian dollar, US dollar currency pair will go up. But if long time we have a sound, okay, a bold, okay, average, a bold forecast, okay, excellent, okay, a trade balance for the US economy, so this downward pressure may continue, okay. As always, the trading triangle, the market, the sector, the individual financial instrument, the heart of the triangle, okay, is the news, the fundamental, okay, and the leaders. And the fundamentals and the news can change all the blah 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 that I've said so far. Yeah? The news can change everything that I've said. Please combine the technical with the fundamental, okay? So I hope you enjoyed this video, okay, this blah 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 blah, okay, as I like to put it to you regarding the Australian dollar, US dollar currency pair, okay, that you will put into practice in order, okay, to cream the market consistently. Thank you for watching, and we will speak to you very soon. We are the TSTW SYS 08 traders.